Production numbers, Mr. Balakrishnan, and do you think that now falling growth reduces the chances of the Reserve Bank wanting to as aggressively raise interest rates to counter the inflation problem, you think?
I think the interest rate maybe, I think there is one more hike left. I don't think it will go beyond that, because you are already seeing your 10-year at near 2 digits, which has been the highest in a very long time. I can remember 6-7 years or so. So I think the RBI has got the most difficult task as far as I can say, because as a consumer or as an industry, I want lower interest rates to stimulate demand, and at the same time to control inflation, monetary policy says that you should actually hike up the interest rate, make capital difficult to, loans difficult, which means that you can't grow your capital expenditure plans, everything. If the equity markets are weak, you can't raise money at a desirable price. And same way, if debt is going to be at 10-11% for the private sector, they don't want to raise. So this means that your supply bottleneck, which is what is causing this huge inflation problem, is going to get prolonged, which means that inflation may not go away as easily as we think, unless there is a demand contraction.
Right. In fact, even from the North Block, that's Ministry of Finance, the latest projection is that inflation could be in double digits still all the way up to December, which is an extension, because earlier they were saying in September things will cool off. But just taking a leaf out of what Rahul mentioned about the IIP numbers, capital goods per se, that's been the biggest point of worry, because that indicates the health of the economy in terms of infrastructure, etc. Now, a lot of the stocks like Larsen crashed on Friday. We've seen a rebound today. Do you think in terms of sheer valuations, still the PEs of about 20 plus are justified in these stocks?
Well, I think the PEs are definitely high for many of those capital goods stock, because I think, yes, order book is one thing. The second thing is execution. How much of the orders you can actually fulfill in a given year. I think they are facing problems across the board. I think where there is on the other side you have a government customer, they are not able to get the cost increases as easily as they should get. Because all the input prices have been going up like our taxi meter virtually. And if you take skilled manpower, I think everybody has been shouting that we are not getting people. And engineers whom they were paying, let's say 2 years ago, 10,000 rupees, today at 25, they can't get engineers. So execution is another big risk. So they may have an order book which may take them for 5 years, but how much they will execute, there is a cap on that. So in that context, I have been negative on capital goods. But what happens is capital goods becomes tagged as the India story. So next time the health of the economy improves, I think these valuations will again go up. So take it in that perspective.
How do you play interest rate sensitives now then in all of this? Banks, autos, real estate, you had DLF coming out with a buyback. Auto sales numbers were not bad. Bajaj Auto sales numbers were largely in line. And then of course you have banks, the first evidence of which is not bad with respect to earnings season. Is there a case to be reasonably bullish given the correction that we've seen?
I think two-wheelers looks quite okay. I think in terms of banks, I think again I distinguish between the private sector and the public sector. I have been, last couple of shows also we talked about, I think private sector banks would maintain their NIMs quite easily. And I think a couple of banks have fantastic CASAs, the current account, savings account, I think they will do it. And the fee income still continues to be robust. I think capital markets is two components, loan syndication and equities. So some of the banks who are not present in equities, but in loan syndication, I think they are continuing to do roaring business. So I think you will see that as we go along. So maybe the private sector banks to me provide a great opportunity to get in now.
Sure. While on the subject of banks, in fact ICICI Prudential is launching a new on it, but as we head into the break, lay the foundation for it. These are thoughts from A.K. Purwar, Chairman of India Ventures, and Peter Morgan of HSBC on what they're making of the overall macro situation in India right now. We'll get a little more specific with respect to sectors and economy when we return.